Good morning, good morning, good morning, good morning, everybody. It is Friday, August 22. I want you guys to relax. It's Friday, okay? Been a good week. Been a good, couple of weeks. But I need you to relax. I really do need you to relax. And the reason I'm putting out this video, and I'm not going to share this publicly, it's only going to be for members, is because we're in trouble, okay? We're in trouble. We have the Jackson Hole is today, and I'll bring you back quickly. I'll try to get this done quick. I swear I will. I sent you out the email yesterday, Thursday, talking about how, we started out a couple days ago. We need a green close. We need a green close. 4 in a row on the SPX, 5 in a row on the QQQ. We closed red again yesterday on both of them. So we have 5 in a row over on the SPX, 6 in a row over on the QQQ. And as I was going down through my, expectations, is that we would get a green close. We'd be going into Jackson Hole. We know that September is coming, and we could all start looking about getting short and thinking big about it. The projected pathway of that on the QQQ. All of that is out the window. All of that is out the window. And I'm giving you a cautious warning. Be very, very, very careful about how you position yourself into any kind of puts over the course of these next couple of days, all right? Jackson Hole shared with you the history. 2024, boom, red day, boom, green day. Big red day, big green day. Big red day, big green day, Thursday, Friday. Big green day, big red day. Going over there, Thursday, Friday. 2021, red day, big green day. 2020, red day, big green day. So that's what we're talking about, the shake and bake. And yesterday was actually, a big fucking warning. Big warning. With 5 red closes in a row. Now, I don't know. I don't believe I did. I apologize. So give me 1 second. I'll pull it up here. Yeah. So as I went through and shared with you as we were closing yesterday, getting into the close, 5 red closes. This is not good. This is not good. You have your 5 red closes just coming into the lows over here in October of 2022. You have your 5 red closes right after the FOMC meeting in December of 2022. A little bit of a dip there, the delayed Santa Claus rally, and then the liftoff up there into February 1, 41.95 before we had our virtual 10% decline. We had 5 red closes in a row as we were heading into Israel invades Gaza of October 2023. We had 5 red closes in a row as we were bottoming in April of 2024. And now we have 5 red closes in a row as of yesterday. This is a big warning. For today, like I was sharing with you at the end of the day yesterday, you have 2 Jackson Hole bounce choices if you're a Jackson Hole studier, as I went over and showed you the Jackson Hole history. Big green day, red day, big green day, red day, big green day. You got today's 639 calls. They were at around $1.60. The QQQ 567 calls right around $1.90. Both of them all closed out. Where was it? I put it here in the replies as I was following. Closed out there right at 142. 142 and 152 over there on the 2 respectively. The QQQ 639s, the QQQ 567s and the SPY 639s. This is not good. This is not good. And I'll show you why this is not good. And Wednesday when I sent you out the QQQ, take the money, fucking take the money, because we were getting extremely oversold. This is the first major warning sign right here. This is the second major warning sign right here. The new moon is tomorrow. Tomorrow. So yes, Keith, you're 100% correct. We are putting in a new moon low. And the full moon, which I'm going to get to you here in a couple of seconds as well, the cornholio full corn moon September 8th, next month. Right after September 8th is September 9th on that Tuesday. This is 2025. I'll pull it up on the calendar or the calculator. All right? This is 2025 is the year that we're in. 2 plus 0 plus 2 plus 5 is a 9. September, 9th month of the year. So over here on Tuesday, September 9th, we have 999. Chris, you can tell everybody you want about the history of 999 from when we absolutely crushed 999 back on 2016, our first year of running all of this. So again, QQQ, another big warning sign. August 1, the open, 558.83. The lows over there on Wednesday, Thursday, whatever fucking day it was this week, 558.84. 1 penny. Meanwhile, the IWM, well off the August 1 lows, up almost 10 points off the August 1 lows. And fractionally having a bad day, a minus 1% day over there on Wednesday when the market was completely fucking crashing. Big warning signs coming at you. So I will go over quickly onto the charts because this is what I'm talking about as well. I share with you this view, and I'll pull it back up. Pull it back up quickly. I know you guys all have to go run and get to work and do all of those things. And where is it? Again, here, 5 red closes in a row, 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 5 red closes in a row. Trying to share with you a little bit of the significance of this. I'll show you here on the SPX as we're looking at here. This is the 1 hour, and the 1 hour no longer extremely oversold as we were when we went down to the bottom there on Wednesday. 4 hour still significantly oversold, warning, but not oversold. But warning, oversold. Bring on to the daily, and the same thing as with the chart that I shared there on the daily. Not oversold on the daily, but getting a significant warning about getting very close to the levels to where you need to be watching out. Simply looking at this from an RSI point of view. Well, here is the warning sign that I'm trying to give to you. And we zoom it on out. What I'm showing you here is this line here, 1096.35. 1096.35 on the SPX. That's the close on September 10th, 2001. September 11th, market didn't open because of what happened. And after the market opened up the next week on September 17th, you had 5 red closes in a row. Bang, 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 bang. 5 red closes in a row. Within a month, the S&P had recovered all of September 11th. That's the significance that I'm trying to share with you about these 5 red closes in a row and the energy that comes off of them. Leave you off for that. And here, what we have been talking about and tracking on this ridiculously long extended bounce move coming off of, the April lows, placed in our 3 because we shifted over to the alternate. Placed our 3 over there when we hit that 64.27. Our 4 was the big July 31, August 1 sell down. And here we've been tracking with a 1-2. This is now an ABC to the move to the 3. To the 1, to the 1, to the 3. I can't say those words online. But this dip that we have here, this 2.21% dip, just almost coming to a okay, that's it. It's finished by taking out the highs over there on the 1. Almost. So what we have here, we have our 4. And what we should now be looking for as we go into September 9th is for that 5. That 5 coming up here, heading up into that 65.27, 65.54, perfect little zone right up there. That's where we should be looking as we go into that September 8th, September 9th full moon. That's what we should be looking for. So being bearish and buying into puts because we get a bounce off Jerome Powell, this is the reason why I'm cautioning you on this. I'll show you here. Just hang on. Here's your full moon. Worked out. Worked out great. But all you got was a 2.21% dip. It's not telling you how deep your dip is going to be. It's just telling you where your turning points are. And then here's your new moon. Your new moon coming. New moon is coming in right now. Right now. We're going to get our new moon today. Whether or not there was one in here in July, I may have missed it. I'll go back. I'll put it in there. But here's your new moon. Coming onto the QQQ, filled a couple of gaps. Okay? Filled a couple of gaps. Look at that. But we have not come down to take out anything with that August, even though we did come down intraday to that August start right there, August 4. Not looking good. Not looking good whatsoever, and because you have these two gaps that are up here above to be filled. Come over here on what we have been tracking. Yes, you do have a negative over on the QQQ, but the QQQ has been in its completely own separate Elliott wave pathway from the start back in April. But still, coming right down into this, making this instead of a 1, 2, 3, 4, 5, turning itself into an ABC. Everything swaps. Come over onto the DIA. Nothing whatsoever out of the DIA. Nothing whatsoever out of the DIA to start suggesting that we are rolling over and we are going to start selling down into September. Nothing. Same thing out of the IWM, as the two of them have been left completely alone for the entire week as everything took place inside of the QQQ. So here's the big warning that I'm leaving you with right now, all right? 5 red closes in a row. Everything looking, oh God, here we go. Everything's going to go to shit. Well, you got your new moon is today. Today, tomorrow, Monday, whatever the, plus or minus 3 days. You got your new moon. You're getting a significant warning about this Jerome Powell coming on here. Where are we? Jerome Powell, the Powell, what the fuck am I looking for over here? Yeah, the shake and bake. Red day, big green day, red day, big green day, red day, big green day. Big warnings. And then you come out to the reality of it all. NVIDIA. NVIDIA reports earnings next week, August 27th. I don't have a calendar in front of my face, but August 27th is going to be on Wednesday. Wednesday of next week. Okay? NVIDIA reports earnings next week. And as you can see here, looking from the April bottom, 86.62, this is a, no question, fucking extremely extended big wave 3 on this bounce. Little tiny dip, nowhere even close to coming down there to that July low, nowhere near it. And all this is 184 to 168, which is the lows placed just earlier this morning. And as we are starting to creep up into the 173s, looking to go green, and highly likely going into that 181, which remember, NVIDIA has the fake print up at 195. 195. We get NVIDIA regardless. You get that bullish unicorn fucking bounce out of NVIDIA all the way up there into the 180s, into the 195s. Any puts that you buy right now are fucked. So do not go loading on puts. PLTR. Oh my God, what a crash. Yeah, it came right down to 145. That's why the trade was set up to be the trade that it is. Again, with all of this shit, you will get another setup coming in order to get into those new puts, bearish positions. But this is not the time. Please be careful. Don't go looking at your positions like we had been looking for the dip back in June, July that we never got, and be looking at your positions again and going, oh, what the fuck? I'm stuck in the mud. Don't do it. September 8th, whole full moon coming, NVIDIA's earnings coming next week, 5 red closes in a row. You got enough time to sit there and build your plan. Let it be. So that's about all I got for you. I hope you enjoy the weekend. I have some family that's going to be arriving in about 30 minutes, 45 minutes. I will be off. I will undoubtedly be taking care of you as we get into the open, as we get into Jerome Powell, but as we get near to lunchtime, noon afternoon over there on the East Coast when markets open. It's midnight for me on Friday. I'm done for the week. So I'll catch you guys in the chat room, and I wish you all an amazing weekend, and I hope you enjoy every minute of it.
Why is it always, what are you doing, and never?
Dude, I got some fucking banana bread at work today, dude. Hell yeah. My mom told me if I wait for things, like, good things will happen to me, dude. And fucking I waited for some things, and I got some banana bread at work today, dude. Hell yeah. So it just goes to show that waiting for things is, like, worth it. But there's a lot of bad things in this world, dude. Like fucking skunks, dude. Hell no. Scratching your eye, but it's still fucking itchy, dude. Hell no. The fucking Cubs, dude. Hell no. Like getting paid, not allowed.